All right, welcome back. It's another video from the Daily Close. This is joined by myself, Crypto-pleb, GOJO, and knxqtr to give you your daily dosage of technical analysis, an update on the market, and just how the tread these bit choppy waters are facing today. We're seeing some double-digit losses across a few assets, aren't we today, boys? Right?
It's a
Choppity
sea of
chop.
red. Sea of red.
Bloody
It's
Tuesday.
yes, it's a bloody Tuesday, or if you're in the West, maybe still might be late Monday or early Monday. But on that point, we're gonna show what we're looking at here, so ways you can go through or wade through these waters, and how you can still preserve your capital, make some money along the way. So, of course, throughout this, realize that this is not financial advice, so please don't, please don't just take it as it is. This is a lot of fun, and this is our passion. So do your own research to accompany what we say. But please also like, subscribe, hit that bell notification as well. And your comments is much, much appreciated. We'll always try our best to get right back to you. But without further ado, let's go ahead and move on over to BTC, and that'll be covered by GOJO.
Thank you very much for the kind introduction there, Crypto-pleb. Let me switch over into BTC and my charts. I hope you guys are doing okay on this day. I do have to say, a little bit unexpected, but also we were due for some correction eventually. I mean, if you're looking at the market at the moment, I don't think there's any particular reason why price has actually gone down. I think if we're looking at this from a slightly larger perspective, this is a small correction within a multi-month rally that began actually in July 21st. So I don't think there's any reason to be afraid at the moment. But in saying that, I know that some of you guys are intraday traders. I know that some of you have some skin in the game. So maybe what we'll do is just do a quick analysis on what we're seeing here. What I actually have here as a range is what we talked about in the previous video that knxqtr covered. And I want to talk and remind ourselves of the context of this. We saw ourselves in a phase of consolidation for a little bit. We eventually broke out of this range, it looks like just about a week ago, and we came back down. Now we wicked below the bottom end of this range, but if we're looking at some of our indicators here, what does it tell us? The first thing that comes to mind, or the first thing that I notice, are the multiple blue bands in our BBWP. What we need to remind ourselves with BBWP is it's the Bollinger Band width percentile, and it tells us when we are in the blue zone, we are in an extremely contracted phase, and we're likely to go into expansion. But again, since this is direction agnostic, we need to rely on some of our trend lines in order to tell us which direction we might be going. If I were to pull that up with our EMAs here, we were on top of our 21-day EMA. We moved upward from that. So we use this as a dynamic support for a couple of days. As you can see, kind of bouncing off of this 21-day EMA. But today we saw ourselves breaking down below, fortunately caught by the 55-day EMA here. So if I were looking at things quite generally, the reason why I am not too wary of this is the first day we've broken down below the 21 EMA. There's certainly a chance that we will move back up. But again, how can we, or what can tell us, what are some things that we can look at to potentially tell us which direction we're going? I want to look at some momentum really quick here, especially with the Stokes. I'm going to start with our RSI up at the top. We're not quite in oversold territory. We are pointing downward though. If I'm looking at our RSI and our EMA here, we're still within the neutral zone. So one reason why this isn't too big of a cause of concern is when we're looking at the RSI is an indicator of momentum. So it will tell us whether or not we're moving quickly or slowly in a particular direction. And what this is telling us is there is certainly, the bears are not in control at the moment, is what is being, or what we're seeing in the on the daily. I do want to touch on one observation again, and just to remind ourselves too of why this might not be the case. When we see these blue areas, right, we just mentioned that this is an indication that we might be overly contracted and we're going to go into expansion phase. When we moved out of each of these blue phases, we saw some pretty hefty sizable moves. The first thing I'm going to highlight is, if I just look at here, again, I think looking at this last week, but I did want to remind ourselves how much we're still expected to go. We have people telling us that we could probably get to about 100K at the end of the year, and we want to look at that as a possibility. The last time we looked at a movement out of these blue bands, we made about a 42% move. Over here, we made about a 12% move. If we were looking here, right after our blue bands here, we saw that we made about a, whoops. Another healthy 10% move. So one thing to watch out for, at least on the daily, is, are we going to bounce off the blue zone? Are we going to reject the bearish control zone, or are we going to continue moving downward, is one thing to look out for. Another thing I want to observe is actually the 4-hour and the shorter time frames, because while some of us do our trades on daily, I know some of us do it within the day. What we can see here is, first of all, we are definitely in the oversold territory at the moment. We're seeing tons of volume. If you're just comparing this to the moving average here. So what does that tell us? It tells us that there is tons of participation in this move. This might be a fearful sign for some of us, because that typically means that we can get more conviction on the move and the direction that it's going. So the more volume in one direction that we're getting, the more it's likely to tell us that we're going to continue with that move for a while, on the 4-hour at least. So if we're looking at the next 4 hours, we've not closed on this candle just yet, but in the previous 3 candles, actually 4 candles, we were above the moving average here. So what that tells us is there was a lot of conviction on this move down, at least for the 4-hourly. Stokes, again, definitely oversold. And then here, with at least within the last 3-4 days, we were contracted, and now we're going into expansion phase. Says the same story that we saw on the daily. I'm going to move down to the hourly time frame here very quickly. What we're noticing on the hourly is it tells a very different story, because what we're seeing is a couple of red bands now. At least within the last 6 hours, we've accumulated 3. What this tells us is, when we're in the red zone, we are extremely expanded and we're likely to move into a contraction phase. So if you are an intraday trader, what you can see is we might consolidate within a range during the next 4 hours. What we're also seeing is we are moving up from the bullish control zone, heading into the neutral zone with our RSIs, and we're also moving up on the stochastic RSI as well. Definitely good indicators, especially in the short term. We can expect some upward movement here. Overall, though, the reason why we shouldn't be too fearful about these moves is because if we're looking at it, give us some context on the weekly, we are still on an immense uptrend. You'll notice that with the last correction of this size that we saw actually led to another green candle immediately afterward. And so there's certainly no fear here. If we were to just quickly draw what we're observing in this move, I guess from September, or from the beginning of September, even further back from March, actually, we saw a higher high, higher low, saw a little bit of a lower high here, but another higher high. We broke our all-time high, and then we're also just, I guess, experiencing some healthy correction. The last thing is maybe we can talk about is targets. So what can you potentially look at or look out for? I'm going to draw some fibs just so that we can, oops. I love to draw. As you can see, I'm using this as my whiteboard. Forgive me here. I'm just going to move out and go back into the daily to draw some stokes across our range. So there are two ways that I want to do this. First, I'm just going to look at our most recent trend, starting from beginning of October. So if I were to draw this here, again, if you're drawing your fibs, one thing to remember is if it is an uptrend, you want to start at the very top and move downward. What we'll notice is right now, we've actually just bounced off the 0.65. I know that typically when we look at points of interest, it's going to be around the 0.618 on the bottom side. And then we're also looking at the 1.618 on the top end. Right now, I guess what we can observe is if we make any sort of move here, I think the interesting resistance that we'd be bouncing off of, where we've bounced off previously, is actually the 59,500 mark, where we see this range. If we can maintain above this, if we can continue to close above this, I think it's basically telling us this is a short-term trend. But again, if we stay around this area, what we can expect is we'll probably bounce between 63 to 59,500 for the time being. So yeah, maybe some hopium for you guys. I don't think there's anything massive to be concerned about. In fact, I think if you've been waiting and if you've got some gunpowder that you're ready to sort of let loose, this is probably the time. And also, since Bitcoin is king, it's affecting all the other altcoins. Crypto-pleb and knxqtr can tell you about how perhaps this might be affecting some other projects. So that's it for me. Thank you very much.
All right. Well, that's good insight. And I mean, yeah, a lot of big movements happening, and with BTC leading, one of the big indicators of how the markets can move. ETH is also accompanying that as well. And so I'm going to show a little bit about this. Let me just move on to my screen here. Okay. Yes. So I'm going to start up at a high time frame here with the weekly. And I think maybe you could probably think what I might want to say, but I mean, yes, we did have a significant pullback, I think down 7% today. Yeah, about 7.8%. But even so, I mean, we're still maintaining a very bullish pattern, still moving up. Even if we were to, I mean, I would ideally say that we close out this week here, and then we just continue up, and then this will just be another higher high, and that would be good. So I mean, overall, on the longest time frame when it comes to ETH, I would say that this is still looking bullish. And so what we might be seeing is maybe more of a shorter term pullback. And I also want to just put some, what's the word? Put things in perspective as well. That back in May we had this significant pullback. Ooh, let's get this back up here. And maybe back then we were down 45. And here we're not so much as well. So still don't be fearful over the long run. ETH, we're not going to zero, so that's the first one not to worry too much about. We can take a look at our stoke as well. I mean, just because we're a bit more negative, the K is past our D line here, the blue, which is a little bit more of a slight bearish sentiment, but this is more in the short term. I'm thinking that we're going to be crossing back on the other side, converge to more of a bearish once we pull out of this recent move here. But yes, we are up in a little bit. We did burn a little bit hot, so I think a pull back down was not unexpected. Was not unexpected. And I think with the BBWP as well, I mean, yeah, I think actually let me just pull this back here. I mean, yeah, just most recently here, I guess there's still, I do recall actually there wasn't so much activity going on as well. The volume was quite low too. Wasn't so many participants. It was below the moving average as well. So I think just maybe something in the market. I think there's some other things, regulations in the U.S. or some other companies, Bitcoin mining companies that was getting a letter from the SEC that may have sparked some concern. I'm not sure if that had to do with it, but I think this might have just been a bit of a blip. However, overall still bullish, so I'm still good on that. I mean, moving down to a lower time frame here. So yeah, I mean, still just gonna draw a few trend lines here just to make it a bit more visually makes more sense here. So this was more a recent previous high here, and then let's see here, and then yeah, I mean, look at that. I mean, it looks like we're just about bouncing off that very long ago previous all-time high. As long as we hold on this today, that's going to be a good sign. However, yes, activity is quite low. I think a lot of people are likely trying to see trying to see what's going to happen first before trying to risk getting in back into the market. Yeah, still a bit bullish line here, but we're definitely coming down and hitting the bottom, a bit more of the oversold. So perhaps uh, you want to probably start seeing the stock start moving up, sorry, the arc back like it's going up, and that might be a good indication of when it might be a good time to consider probably likely DCAing, or DCA is to dollar cost average your way back in. Let me just pull on the Bollinger Bands here as well. Yeah, so I mean, for the most part, we stayed above the 20-day moving average here. So that's usually quite good. It's only until recently that we had this pullback. That being said, exponential moving average for the daily, we are still trading above this. So over the long run, even on the daily, we're not doing as bad as some people might think. So that looks all right. Let me just clear this off here. Yeah, I'd say even still, let me just move here. Yeah, that'd be the lowest recent high. Yeah, no, I think we're still making our usual patterns here. And so this is what I like to pay attention to. We just want to see where we just close out here. So the next few hours will be something to pay close attention to. And moving down to the 4-hour as well, I'm gonna do a bit of the same thing here. For those of us, who do, oh boy, doing the whiteboard drawing here. But for those of us who like to do intraday trading, we had a pretty consistent, you know, higher lows and higher highs going up. So this has been actually quite bliss until quite recently, where we start to have an extreme amount of activity, primarily by the sells. We did have an attempt here. Oh yeah, the bulls trying to get back here into the market. Let me just spread this up so it looks a little bit bigger. That looks like a very accurate doji candle. So still quite indecisive. And then that obviously played out in the next wick here. So I think we're still above that line from the previous all-time high, which I think might be acting as a support. But yeah, definitely watching out for how it's going to play out in the next few hours is something that's going to be key. Typically, as I have always learned from my man knxqtr, we want to see a bit more of a reversal and see more of a confirmation first before getting into this. So it might be good to just kind of see how it might play out. Same here. I mean, just like I said on the daily, wait till it curves up a bit. However, we do look like we're coming back down. And this might intersect again. And now it's obviously a bearish play. So it might go dip a bit more back down in the short term. We still, bit hot on the BBWP, but that's with the action and the current volume that's going on right now. Yeah, so I mean, I wouldn't want to buy in here quite yet. I don't think this right where it is now would be the absolute bottom, but maybe closer down, maybe perhaps even 4,225. Next, if you're DCA in 4,000, about 4,108, 4,180. That might be some areas to consider. Just watch your other indicators to make sure you're not getting into what might be considered a bull trap, because we don't like those. And let me just pull back for one last thing here. The EM200 EMA, we are colliding with that here with a 200 exponential moving average. So we're going to want to see or hope that we get above that. If we stay below the 200-day moving average, that will be some slight cause for concern. And Bollinger Band, well, that kind of just, we are expanding, or I would say expanding, but we are opening up the Bollinger Band here. So we might be following this trend just for the short term. So we need the bulls to jump back in here again. I think that, I mean, yeah, if you're trading on the 1 hour, unless you're trying to make some short gains here, even then, I mean, you're probably looking for a little bit more downside in the short term. So unless you're thinking of doing a planned short, yeah, I might want to see it play out for just a bit longer. But however, here, yeah, 1 hour is likely still going to be a bit bearish there. And we are pointing down on the BBWP as well too. So these are something to pay attention to. If I had to summarize everything here, I mean, first of all, don't panic. If you are a long-term bear, bullish, long-term bull on ETH, you should stay that way because it's going to, as long as we hold and don't continue to plummet down past previous all-time highs, there's not too much cause for concern. However, if you're thinking in the short term, trying to make some money, going long might be a tough play, and you should trade carefully. But overall, this is not financial advice, so do your own research as well too. But I think that'll cover my portion there. So I'll give it over to you, knxqtr.
Perfect. Thank you very much, boys. So I'm going to cover a coin that we've covered previously in the past. The reason for that is because it is one of the better performers in more recent times, and it's also a popular coin. I know a lot of you guys are interested in as well, and I think you are currently trading or at least holding. So let me share my screen for AVAX, Avalanche, symbol AVAX. So this, let's start on a daily time frame as usual and work our way down. And the three things that we want to focus on are, again, momentum, volatility, and also trend. Now, if I'm looking at this chart, just from the market trend, it looks excellent. Not too much to worry about here. We did pretty much tag the 21 daily EMA here. And if we do close anywhere here or above, we'd be closing above all moving averages. So that is very bullish. Having said that, there is still 11 hours and 11 minutes left on the daily candle. So quite a lot can happen during that time. I would wait for a confirmation of close before making any other sort of big decisions on that. In terms of, the moving averages, we're trading above all moving averages right now, which is good. Volume isn't always indicative of, a particular sort of strength in a direction. However, we are seeing, you might notice on this move up particularly, we are seeing a little bit of volume being flat, which can be a signal of a weakening trend, but not necessarily. Volume is always a good confirmation indicator and not something to be used on its own, but it is something to keep in mind. So trend, we have just straight continuation on a daily time frame. There is nothing bearish about this. If we do close anywhere here or higher, that would confirm this sort of hammer candle formation on this daily candle, which is obviously a bullish formation. Let's look at some of the other indicators. You can see on the RSI here that we are potentially playing out a little bit of bearish divergence here. And how do we know it's bearish divergence? Well, we are making a higher high on price action, and the RSI is showing a lower high. And when you have that, that confirms a bearish divergence, which we are playing out. And the technical target for that would be around this level. So, as long as we can keep here, things look very, very good, even on the daily time frame. We are dipping slightly out of the bullish control zone. I don't think that's too much to worry about right now. But if we do start to correct further, then I would expect this to at least retest the sort of median of the range on the RSI. Volatility on the daily is coming down. You know, ideally you want to see, so if we take this example here from the 2nd of November, you see volatility coming up from the floor and price increasing at the same time. That is always a good sign. But here we have, again, you know, making high highs on the price, but volatility is coming down. What does that suggest? That suggests a weakening trend. However, having said that, you know, I do think that before we reach a major high, I would like to see this go into the sort of 90 percentiles again, volatility, before calling any sort of major highs. But we can definitely play around this range for a little bit without too much of a problem. What are the Stokes showing? Stokes again are another momentum indicator. Stokes are crossing back up above 93.03. We're currently trading at about 88.80. So maybe a little bit of downside, maybe a little bit of consolidation here, but nothing too worrying right now. People always tend to get a little bit worried when the Stokes are trading in this sort of critical region, but it's not always you know, a sign of weakness or a sign to short. You can see there are a lot of fake signals, and just to give you an example, you know, you can see all this. You got a cross up, a cross down, another cross up, down, up, down. So there are a lot of fake signals. Again, what I want to stress is that, you know, one indicator isn't sort of like, it's not one indicator to rule them all. You really have to use confluence within all indicators to actually make a informed decision. So that's it for the daily. The daily is looking very bullish, and we do have the market trend, which I you know, put most importance on, is in an uptrend. Momentum is slowly dying down a little bit along with volatility. But so I do expect, you know, maybe some consolidation, maybe grinding out this sort of area here. In terms of invalidation, where would I start to get bearish on this? So any closure below around $84.50, I would start to get a little bit more bearish. The reason I say that is because that is our previous higher low. And once we start to close below that and take that out, that is when the market trend starts to shift. And targets for that, if that does happen, I would be looking at around potentially the 55 EMA here, and where we have our previous lows as well. So around about $73, $74, give or take a couple of dollars, around there would be the next technical target if we do break this $84, $85 region. And bear in mind, that's on the daily. So targets will probably be different for the lower time frames, which we'll go into now. So the 4 hour, again, it tells a little bit of a different story. We are trading below some of the major moving averages here, namely that we're trading sideways on the 55 right now. We've come down past the 21, the 9, and the 13. We did play out a lot of bearish divergence on the RSI, you know, at 1, 2, 3, and here 1, 2, 3 again, drives of bearish divergence. Usually 3 drives of any sort of divergence is usually like the signal to get out or to get in. You know, it's the same with bullish or bearish divergence. So ideally you want to see 3 drives. And then we do have that here on several of the highs. And then we've kind of played that out on the 4 hour at least. Let me just make this a little bit bigger. Volatility. So what is volatility telling us here? Well, on this move down, volatility did see an increase along with volume. And what that tells me is that this is more likely not to be a fake out move. You can see there's more interest and there's more with the volume and volatility on the downward selling pressure. And I think that is driven by obviously BTC moving down as well, and also Ethereum. What are the Stokes telling us? Stokes are crossing back up above $97.43. So again, you know, maybe some downside, a little bit more downside from here. Your previous, you have sort of broken structure on the 4 hour. If you are trading the 4 hour, you have your low that was setting right here, and we are currently making a lower low. It's not confirmed. This is not a confirmed low yet. We would need to see price move above, especially $90 before confirming any sort of local low. So that's not been confirmed yet. So just keep an eye out for that. And if I'm just drawing like fibs here, I just want to show you that I think I've talked about this before. I've been using the fibs quite a lot more recently in my analysis. The 1.618 is always a key area to look out for. And you can see again on this chart specifically, from this sort of consolidation and downward move here, we did have a technical target of 1.618, which almost perfectly hit. If we did close above that, I would then look for targets towards $107 and then $111. However, we did get rejected from the 1618 and are making our way back down right now. One thing that I also did want to show as well, sorry, just going back to the daily, is that there is nothing bearish about this chart. Well, there are a few signs of bearishness, but in terms of, if we draw a trend line here, and let me get rid of my moving averages. If we draw trend lines of the highs and the lows, you can see that we are trading in an upwards channel and it is being respected very, very well. So any sort of move down to, 74, 74, 73, which was actually our technical target. If we did break down from this level, if we close below $84, $85, would be fine. And then if we break that, I would have targets probably down to, well, I'd probably expect us to first come down to about $55, maybe play out a little bit of a bounce there. But I think ultimately would come down and test maybe around the $40 area, where we have a lot of the liquidity and the previous highs and support here, which, by the way, there was a very nice support and resistance flip here, and also here as well. Very, very nice. This previous resistance, we used it as support, went back up. Once we broke this all-time high over here, we then used it as support, and we haven't gone back down since then. But there is pretty strong support at the 55 region. That's I think that is it for Avalanche. Yeah, again, if you are trading the lower term timeframes, let's have a look at the hourly. Hourly freshly entering the bearish control zone. We will see an exit out of this at 88.66, which we are pretty close to now. Volatility is starting to come down, which is a good sign. You want to see, when you see volatility come down and a sort of like a downwards movement or consolidation, that is usually a good sign. If you see increased volatility with an increased, a decrease in price, that's usually a sign that there is further continuation for the downside. But on the hourly, Stokes are crossing back up above 86.98. You can see that there has been a little bit of indecision here, but I do expect us to play a little bit of a bounce from this region, and then we'll look at it from there, at least on the hourly. But overall, daily chart is looking very, very good. Market trend is still intact, very much so, unless we're below 85. Let's call it 85. Which is I think hard to say for a lot of the other coins, and this is definitely one of the strongest performers. So if you are looking to start looking for long positions or start trading a coin that is showing strength, AVAX is definitely one of those. And that's it for AVAX.
What's up? There we go. Well, that's BTCE and AVAX, expertly told. There's a little bit of choppy waters here in the market today, but there are some good ways to, preserve your capital, stay safe, and still find some opportunities to make some money. These assets are a good long term, so don't lose faith. So, as always, this is not financial advice, so we expect you to do your own research as well. But in your own research, if you could also let us know what coins you want us to cover or share some of your thoughts, then we can always exchange information just like that. And in addition, if you could like and subscribe, it really helps us on this channel. It's good feedback loop for us, so we can always find ways that we can continue to improve. But without further ado, this is the daily close. It's another day of technical analysis. We'll be doing it again soon, and we'll see you all there. But until then, may the pump be forever with you.
May the pump be with you all.
May the pump be with you.
In perpetuity.